Now, today's agenda, I'll just itemize it, what we're going to be going through in today's session, how to place orders and manage trade on both, not just only MT4 and MT5, but also on Android. So the rationale behind I can't put trade on my platform do not occur for any reason. So we equally going to go a little bit step further to know how to analyze the market fundamentally, technically, sentimentally, and setting up our terminal and how to do this setup. Then we can end today's class. It will not be too long so that the review of the video will not be too boring. I mean too long for any reason. And then we can eat home add. Now, so we go straight to looking at how to place trade on our charts. So I'm going to open my so get now I'm going to open my charts and then we're going to go to orders, type of orders. So from the type of order point of view, we're going to possibly look at the 4 basic criteria that we look into while placing order. Like I said, in the order time, to place an order in the forex market, 2 things are involved. You either buy, or let me say buy, you either buy, sell, or stay off. Stay off. Those are the 3 things you can do in the market. So if you want to buy, you have a chance to buy at the current market price, which is value X, and you equally can buy at a price higher than the current market price, and you can buy at a price lower than the current market. Okay, let me move this. You can equally buy at a price lower than the current market price. Now, when you do a buy at the current price, this is what we call instant order, okay? When you do a buy at the market price, we call it instant, okay? Instant order. That is instant. You take a order. Let's say the price is for a particular commodity is currently 1.25. Let me say 2530. And you want to buy, this is what we call instant order. But if for any reason you feel like there is going to be a barrier at a particular level here, and you feel like there's going to be a barrier here, and you feel like you want to buy only if the market goes above this particular level. So this is a case where you want to buy at a price higher than the current market price. What you do here is called a pending order. Pending order. And in this case, we say we are doing a buy stop. Okay, you are buying at a price higher than the current market price. However, if you feel like you want to take a buy only if the market goes below a particular, if the market goes to a particular level, let's say here, that is when you want to take your buy. Okay, so the buy you do in this kind of situation is what we call a buy limit order. It's equally a pending order. Pending order to do what? To buy limit. This is a buy limit. Now, what are pending orders? Pending orders are these orders that we put into the platform, and they are only executed in future. Okay, let's say you don't know when particularly in the future that this pending order will trigger, but you are only putting the order should in case the market goes to this area later on, then you can trigger it. Perhaps you have an understanding of where the barriers are in the market, and you want the market to get to these levels before you place it, and you do not have the time to sit down. So in general, orders are instructions given to your broker to execute a particular contract for you, either at the current market price or in a future price. When you are executing an order at the current market price, we call it instant order. And when you are executing an order at a future price, let's say price that is not yet currently running, then that is what we call a pending order. So now, for example, now you want to buy at currently the price is 25.30. If for any reason you feel like you want to wait till you buy at 25.15, that is a price lower than 25.30, This is buy limit. If you feel like, oh no, I don't want to buy at the current price, I want to buy at 1.25, 45. So 45 in this case is higher than 25.30. This is what we call a buy stop order. Now, to do a buy stop order or a buy limit order or instant order depends on your strategy. And we're going to explore this individually as we progress on. So also, just as in case you want to buy at a particular price, you have the right to buy instantly or in a pending order. So now, for instance, let's say you want to sell a particular currency. You have the right to sell at instant or sell at a price higher, or let me say sell at a price lower. Now, when you do a sell at a price lower than the current market price, that means you want to sell stuff. That is selling at a price lower than the current market price. So in this case, you sell stuff. That is selling at a price lower than the current market price. Now, in this case, you equally can sell at a price higher, and this is sell limits in this case. Now, if you are doing a sell at the current market price, we call it instant. So let's put that one as X. So when you are not sure of what to do in the market, you can do a stay off position, right? So we call it stay off position. That is doing nothing is equally a position. It is a position where you do not have to risk anything, both time, money, and your emotion. Okay, so it is an automatic win. I mean, trade that close at break even. Okay, now this is it. To trade successfully, you do not it's not like you have to be in the market 247. Wherever the setup is not clear, wherever your setup is not materialized yet, then you do not need to force the trade. You stay off from the market. It's equally a trading position on the zone. And discipline wise, you need to have this patience to wait for your setup to materialize. So while your setup is still brewing, while your setup is still undergoing process of formation, then all you do is staying off. So let's go to the chart and possibly look at this on our platform and see how we can individually place trade in this regards. So if you look at, this is our MT4. Now, this is our MT4. I want to use a blank plain chart, and then this is going to be like a default, right? So I'm going to use blank chart. So this is our blank chart. I'm going to make this very big. So if you go to your terminal, at the top of the chart, you're going to see some icons. So you will have where new order is indicated. You will have where auto trading is. First and foremost, if you look at your chart, sometimes these things can be arranged in some different manner. You want to make sure that they are well arranged. You can see that you can have moved them away from the correct price. Make sure that you move all your tools to form a straight line so that they don't, you can have a bigger chart view. Now, what you want to do, if you want to place order, you press this new order, right? If you click on this new order, what happens is that the price button will come up. This is correctly on the Android device. I'm equally going to do this on, this is MT4 on your PC. I'm going to do the Android version so that you can see this technically. Now, this currency pair you are looking at the top of a chart, you will see GBP, JPY, which is the current pairs I'm looking at. So let's say I want to do, before we take a sell, we want to look at the condition of trade in the market. You can see that this market possibly going down, right? But don't bother with the analysis involved in this trade yet. But what I have is that I just want to see that I have a possibility of selling this market at this price. But invariably, if I want to sell this market, yeah, I want to possibly have a look to sell at, let me say, now let's take a look at it. To sell this market, I want to do this selling only when the market gets to this point, right? So I want to sell at currently at 153.16, which is the price that is here. But if you take a look at the market at the moment, the market is at 152.97. So what do? I place a sell limit order because this is a sell at a price higher than the current market price. So how do I do it? Now I'll come to my chart where I have new order. Then this is sell limit. So first and foremost, I have to decide the volume I want to trade. In this case, I want to be using the minimum volume since this is a testing platform. I want to use 0.1, 0.01, which is the minimum in the Forex industry for Forex market. Now, you need to set your volume. The volume is the first thing, but before you set the volume, make sure you can see the currency pair, and you can see that the currency pair that is highlighted here is what you actually want to deal in. Now, the next thing is you want to do a pending order, right? Change the type of trade into pending. So when you see it change it to pending, then the type of orders will be sell limit, selling at a price higher than the current market price. So I'm going to put my price figure, which is 153 point what? 16, right? So when I put 153.160, right? So I've just put my order. Now, for every sell you do in the market, let's say you sell here, it is expected that the market should go down for you to make profit, isn't it? So your profit is going to be at this point, right? Now, your exit for loss, if your market goes against you, your loss is going to be at the top. So invariably, we put what we call our stop loss at a higher price, and we have our entry at this kind of price. Then we have our take profit. Take profit is the price where you have to exit the market with some profit that you are okay with. Now, if this is your stop loss, entry price, and take profit. Stop loss is that order that pending order that is triggered in the market when the market is going against you. Okay, it is an order that takes you out of the market, thereby protecting your leftover capital from complete ruin. So you should be able to know where in the market you are going to be wrong, and immediately this level is reached, place an order to exit the market there in case you are not online to monitor the trade. So in this case, I want to place a sell limit. Now, if I'm placing a sell limit at 153.16, I want to use like something like 25 pips as my stop loss. Like I said the other time, the measurement of tick in the market is in pips. So the unit of movement in the market is considered to be pips. So everything we have to say in the market when we are placing order will be referenced in pips, even spread also. So I want to put 25 pips. So if I had 25 to 40 to 16, it's going to give me 40. So that would be my stop loss. So I'm going to put my stop loss up a little bit. That would be like 53.43. Okay, that is stop loss has been taken. Then I want to, if I'm risking 25 pips, I want to be using something like 50 pips as my take profit, isn't it? It will be good. So that would be like 52, 52. If I take 50 here, it will be 52.85. Okay, so that would be like 52.85. That would be my TP, because if I'm taking 16 here, okay, 52.75. 75. That settles it. Is that supposed to be? If I'm taking 15 out of 53, that was 70. So let's put it that way. Then this order has been fully set. Now, if there's a condition for which, if you're using your MT4, if you want to put expiry, click on expiry, meaning that by so time, if this order is not taken, please delete it. But we're not going to be using that at the moment. So this trade is already set. My stop loss is already set. My entry is already set, and I will click on place trade. Now, once I click on place trade, this trade has successfully been placed. You can see the order on this chart. If you want to see, just I'll put this one on volume. So now you see the order has been placed, the take profit, the stop loss has been placed, and the TP has been placed. If I want to adjust this order, I can as well say, okay, I want to drag it a little bit to whatever I want to put it. You can see I've just adjusted that. My TP has been adjusted. If I want to adjust my stop loss, I'll just come to this place. I will come to the order level, and I'll drag it to wherever I want to drag it. While I'm dragging it, you will see that the USD minus 79 pips or something is already indicated, telling me that I'm risking 79 pips in this trade, but I don't want to risk up to that. So wherever you want to put it, just put it. But all the same, you have to understand what you're doing. How to do this buy or sell at any time will be fully discussed while we talk about how to analyze the market. So this is one type of trade I can possibly take. Now, let me say on this same chart, I want to have, I think there's a barrier here. And I feel like if this market comes down to this level, if this market comes down to this level, it should do me a buy opportunity. So in this case, I want to place a buy here. Now, this buy I want to place here is a price below the current market price here. So the buy I'm going to be doing here is what we call a buy limit. Now, if I'm going to be placing a buy limit here, the price here is 151.31. So I'm going to be clicking pen orders, right? So I want to do a buy limit now. I will say buy limit. I'll first change my volume, change this one to pending, turn this one to buy limit, then place my value as 151.30 something. So 51.35. So that is where I want to buy. Now, if I'm buying a particular product, now let's say we are done with our current sell position. If I'm buying a particular product, it is expected that the market should go up, isn't it? So let me say this is my buy entry. Then if I'm buying, I'm expecting the market to go up in my favor for me to make profit, isn't it? So automatically my stop will be here, and then my TP should be reasonably bigger than my stop. So if I'm taking a buy at this point, right? Now, let's say the buy I'm doing is at 151.33, right? Then I want to put my stop loss a little bit higher, let's say 50 pips, while I risk 20 pips stop loss. Now, in this case, I'm going to now change the pricing here. This is 151. Then stop loss will be below. Now, it means that the stop loss will be lower to this. So I will now put it 151.0. So I'm risking .00. Sorry, I think 151. Now, I'm risking 35 pips in this trade. Then I want to be targeting 50 pips. So it will now be 151. Now I'll put 151 dot what? Since I'm entry at 35, I want to use 85 pips. 151, 85, 0, right? So that is like trying to get 50 pips, risking 35 pips. If I click place, this order will be fully placed. You can see that this order has been placed, stop loss is indicated, and then the TP is equally indicated accordingly. This is how to place the order. If you feel like you want to do this on your Android device, there also could be a better way of looking at it. So you just come to, sorry, let me connect my phone. Then you can see how this is being done. Now, this are situation where you are doing buy limit and buy stop. Now, if you want to do a buy stop order, let's say you feel like if this market goes above this level, then it will keep going up, right? It will keep going up. So let's clear this chart a little bit. So I'm going to remove all this. So this is now what I do not want on this chart. I will remove it. Now, if this market violates this level, it is expected that it should be going up, right? To where? I want to be looking at this possible market move, right? So market is currently here. I feel like if this market violates this level, 153.16, I want to buy this market to target the pricing at this point. You can see I want to have the pricing at this point. Let's say I want to have the pricing at this point as my focus 54.75. Then I want to be using this also as my stop loss in this case. So I want to buy at this point. So I'm going to be doing a buy stop. Now in this case, I'm going to put end order. So if I'm buying at a price higher than current market price, I'm going to be doing a buy stop. So what I do, I come to this level, change this one to pending, and change this one to buy stop. Then I'll put the price at 153.16, right? So it will be 153.16. Now that settles that. Then if I'm going to be buying this, my stop loss is going to be 152.90. So I'll just put it there, 152.90, right? Then my TP will now be 154.07, right? So when I go to 154.07, then I will do what? Place. In this case, entry price, stop loss, and TP are already set according to this parameter. Then I will click place. Okay, my entry is 15, buy stop. I'm buying at a price higher than the current market price. So buy stop. So entry is 153.16. Place, then stop loss is 152.90. Then TP is 1 154.70 something. True. Let's remove this and then think something is wrong somewhere. Something is wrong somewhere. So, but the order is be fully set in this regards, as in you can just place it that way. 152.90, then 154. Okay, 154.07. Once you do this, order is been fully set, then you press OK, then you click on this. So normally this order should be set, but I will possibly take a look. I think my network a little bit, but everything is set this way, and then it should scale through. Now, Paravesure, you want to do any order. This is just what you do. You come to the platform, you select one, the volume, two, type of order, type of order, then three. When you do type of order, you equally want to have the entry, the stop loss, and then the TP. Paravesure, I want to make it known to you that stop loss and TP are equally pending orders, because when you set them, they are not triggered immediately. They are only triggered in the future. Okay, so that settles that. So once you can identify the structure on the platform, then you possibly are good to go. Now, on the Android, the look does not really differ. It's still going to give you the same view, and then so I'm going to connect my phone, then you see what this look like on the phone. So now on this phone, I'm going to have, now this happens to be the chart on the phone. Now, if I just want to wait for this to load, and then let's say I want to place an order on my phone. I'll just come down to the top of my chart here, and I will possibly just come down at this point. You will see where those arrows are located. If you look at the currency pair that are listed here, and there's a particular one that is not stated that you want to possibly trade, click on the top arrow on your chart at this top place. If you click on that top arrow, it will show you the box that contains some other currency. So you can possibly take a scroll. Let's say I want to add this currency pair to my place. I will click on it. Anything I want to add, I will click on it. Then once I am done, I'll come to, let's say I want to do CHF JPY. Now I'll click on it, open chart. So when I click on open chart, I'll make it big. Okay, you can see that it looks almost like my trading terminal on the laptop, but just like this one is now on a phone version. Currently, the market open with a gap to the downside, and then we possibly want to be taking a look at what to do in this market. Let's say I want to wait for the market to do a comeback to this level. Let's say I want to wait for the market to do a comeback to this level, like it will do like this, then I will sell. So I want to sell at a price lower, I mean higher than the current market price at this point. Now this is what we call a sell limit, right? So if that is a sell limit, then what I want to do is I want to click on this and then go to new order. You can see new order. I will not change this to market execution to pending order. Then I'll click on sell limit, right? So when I click on sell limit, the next thing is you want to select your volume, just like I did when I was looking at the laptop. So this is your volume, and then the price we're looking at to sell is, let's say the current price is 120.32. So we want to sell at 120 what? 120.32. So you want to sell at 121, let's say 121, 121, or let me say 120 70. Okay, let's say 120.70. So that's where we want to sell. So your stop loss will be here. Now your stop loss is going to be here. So you're going to set your stop loss. Since we are selling, stop loss will be higher in price, right? So it will be 121 something, right? So 21, let's say 21, that will be 30 pips stop loss. And TP, you can now say since I'm selling at 70, I can target 120.0 for 70 pips. then I would not, if I'm looking at expiration, I will put the timing, but I don't need to put expiration. This is a perfect sell limit order, stop loss, volume, entry, stop loss, and TP set. So once this is in place, I'll click on place. So it's telling me off quote, but I already know perhaps the server is not yet open for trading. So I'll just let it be, but the order is fully set perfectly. I'll possibly take a snapshot of this so that I can work with it tomorrow. I mean, when I get to the office later on. But nevertheless, perhaps that is a perfect order in place. Now, for Parabesho, you want to possibly go back and pick some other thing and then take a look at this. Then that is just all you want to do. Let me now say I want to possibly do a buy on this market. When they get to this point, let's say one way or the other, this market will come to this point and then it will continue to go up. Then I want to do a buy at this point. This is buy at a price below the current market price, and this is what we call a buy limit. So in this case, I'm going to be doing a buy at 120.24, and then if you want to do this, just click on the products, right click on it, go to new order, change it to buy limit, and then put the price where you want to buy to be 120.24. Then put your stop loss as 120, because if you are looking at 24, the stop loss will be below it, isn't it? Then the TP will be 121 something, like 121.300. That would be like 80 pips target. Then you can say this order has been set. You can now say place this order. This order has been fully placed with all conditions already set in place, and it will show accordingly. These are the order that we have placed the other time in this market, and then it's still currently possibly running and waiting for execution. Now, if you come to a possible way you want to look at this, that's just it. For instance, you possibly do not want to analyze the market on a Android device or a PC. You want to use an MT5, depending on your account type, you follow the same principle. And I hope that settles our how to place trade on the platform. So let's quickly go to our notes and possibly take a look at this order respectively. So I'm going to take to the notes, and then we can now see where we stopped yesterday on how to place order. Sorry, we can't go that fast. Okay. Yes. F slideshow from current. So buy stop simply means placing order above the current, above the current market price, and then buy limit means placing order at below the current market price, and the same thing as sell stop. We say we have six types of pending orders, namely the buy stop, buy limit, sell stop, sell limit, and then the exit order, which include the take profit and the stop loss. However, in the instant order require you to either sell at the current market price if your analysis indicates the market is going down, and buy order indicates that you should buy at current market price if your analysis indicates you should sell at that particular time. I hope this is clear. Okay, whatever the device you want to use, be it online version, MT4, MT5, Android device, all still the same. Okay, so now Paravesha, I have a particular trade I want to look at. We've done that before, so we can proceed in this case and look at our next line of action on how to analyze the Forex market. Yes, in analyzing the Forex market, three things are involved. You possibly can look at each individually or create a strategy that combine both. Now, however, we look at the market analysis from the fundamental aspect. This fundamental aspect involves putting up trade decision based on news schedule on the web platform. Now, as far as trading is concerned, the most important web page that is available that provides free information based on technical fundamental analysis to traders is Forex Factory. Now, I'm going to depict on how to set your Forex Factory, but before we get there, I want to tell you something. While we're talking about the advantage, the advantage of Forex over any other market, we talked about that the market is available for trading 247, and then you can create a strategy to meet up your um, personality. So in this case, before you trade, we equally tell you that the market participants involve 80, 90%, 98% of banks and others. So when the banks want to act, there are particular information that they often act on. These are called the major news. And then when the banks are going to be on holiday, it happens that the volatility in the market will equally drop. So when you're looking at fundamentals, you want to look at factors or conditions that will be interesting to the bank, which are called the major news, and then you want to know when the bank will be going on holiday. These are called the no impact news. So let's take a visit to Forex Factory and then look at how things are done and how you can set your terminal. Like I said, I'm going to be interested in two types of news from the Forex Factory. The one that indicates when the banks are going to be holiday, so that I can also take holiday myself, and the one that interests the banks, known as the major news. Because if you want to pay attention to all the fundamentals in the globe, then you possibly will not even have time to trade at all, because so many news, so many patrons comes up almost every ticks of the time, and you do not want to use that and base your judgment on those kind of in factors. So when I come to the Forex Factory, what I look for is just the major and the technical. So what you do is this: how do you get to set up your terminal on the Forex Factory? So I'll come to forexfactory.com. So when I come to forexfactory.com, now the first thing I want to do, I want to set up my terminal, because if you do not set up your terminal, then anytime you come to the Forex Factory, you have to do this over and over again. And this is not the way to do it. So first and foremost, you want to create an account. At the top of the chart, you will see where um, join us is indicated. Click on join us, create a profile, and then enter your username and login. Possibly save, remember password anytime you come to this platform. So this enables you, whenever you come to this web page, your settings will be automatically attached to your profile, and then that will make your analysis very fast without any waste of time. So taking a look at this now, on the top of the chart, you click on what we call calendar. Okay, at the calendar aspect, when you click on calendar aspect, once the calendar aspect is loaded, what you want to look at, or you want to look at the timing, make sure that the timing on your local computer is synchronized with the timing you have on the platform. Now, on this platform now, you see that you have the weekly. Look at the time here. By my time, I have 10:36. I want to equally look at this time. It has to be 10:36. If otherwise, click on it and set it. Set it, just click on it. The timing should show up, and then you can synchronize your chat whatever. So at this point, you will see your time zone. Set your time zone GMT +1. Set your A format if you want it to 24 hours, or if you want AM and PM. Then click on save settings. Once you click on save settings, this will save the time automatically, so that the timing you are seeing on the Forex Factory is equally synchronized with your own local time. You want to have a perfect timing. I'm sure that is why you want to look at the fundamentals, so that you will know when there will be volatility or when there will not be volatility in the market. Now, again, the next thing you want to do is you want to go to filter at the top of your page here. Click on this filter. I want to uncheck this one because I do not need it. I only need the major and the gray. The major ones are the ones. The gray one are called the medium, and the yellow one are the low impact. I do not need the medium and the low impact for anything. The high impact news are used as fueling factor when there will be volatility. So when I know that there's going to be an high impact news at a particular time of the day, I either prepare my technical analysis to meet up with that time. But if I have misinformation as regard my technical analysis, then it's for me to stay off from the news time for that period. Now, the gray news is called the no impact. Wherever you are seeing this gray, it means only the banks are on holiday. Especially when American banks are on holiday, you don't want to trade because volatility will often be high. low. So you click on apply filter. But before then, make sure you check all the currency and all the news reports. You can see I have limited news. If I decide to log into my account on any platform, this is what will show up. For instance, now, let me say I want to log into my account um, on Android device. I'll go to Forex Factory. You can see I just log into I want to log into my account on Forex Factory. The settings will be carried along also to my phone. As in, you can see I'm logged in here. Then I'll click on calendar. So when I click on calendar, the information that I have set in here will come also as set up here. So if I decide to change my settings here to reflect all news type, okay, apply filter, it will equally reflect on all my account profile. So if I click on calendar again, it will reflect on all my profile. As you can see, it has all my profile has been populated to show this. So whatever I do on my laptop automatically synchronize on my this thing, but I do not need all the news. So you can see that if you synchronize to show all news, you will have too much more than you can accommodate. So just go back to this level, uncheck this and uncheck this, then you have it set up. So if you log into your account using your profile on any device, you only see the major news, and that's checkmate a whole lot of things. Now, if you look at this on Tuesday, on Wednesday, which is 14th of July, French bank holiday is going to be on holiday. So possibly there will not be market in France, but that is not a national holiday. So it is not paramount to me. Trade continues. So I already have a schedule for the week now. All the news that is going to happen this week are already scheduled, and I can create a strategy, create a trading plan based on this news forecast. As far as I'm concerned, I'm going to look at USD. On Friday, retail sales is expected to come out a little bit better than last month. Core retail sales better, and then USD Fed Powell. This is a speech we know we do not have a forecast for it. So you just look at USD Fed Powell forecast for it, no forecast. USD PPI, that is 0.6, a little bit like that of last month. Then generally dollar is not too it's not having too much of fundamental expectation, but you know that 1:30 tomorrow, which is New York, there will be whatever. But sometimes you possibly can know this, that during news schedule are always coincidentally tallying with when the market volatility will be high, especially in the London and also in the New York session. These are time that's whatever. But the reason why you have to come to the Forex Factory to know this schedule is to know the particular currency pair that is going to have high volatility at that particular time of the day. I hope that is clear. Now, make sure you are able to set this. I will come to analyzing how to create a trading plan using the fundamental later on as we progress. But first and foremost, we are done with setting our platform and our fundamental view on this platform. So you come back to this chart and then look at the telephone current slide. Then you look at sometimes some act of God happen and they dictate the pace of the market over time. Attention should be paid to this to ensure that no shock is coming our way. For instance, you look at the Brexit, looking at the death of the army general in Iraq the last year, November. Then you look at a lot of things, even COVID-19 also affecting the market and still affecting the market. Those are act of God that you equally need to pay attention to. Okay, why they happen, you can equally see this report on Forex Factory also. So now, if I go to the Forex Factory, what I want to see is that I will go to news. When I go to news, and then when you click on news, I'll scroll this side of the box, hot news. So I'm interested on anyone that has red. If you cannot see anyone that has red, then there's no important news to wage your view it. If there's going to be any pandemic, it will be highlighted red, and then you can see it often. Then you can start creating your trading plan in line with that. But for now, the market is settled and balanced without anything to worry about. So we use the Forex Factory for calendar purposes and for news gauge. Okay, the report is always on your chart. Okay, so you only pay attention to the one that is highlighted in red only, that are major news that can move the market. If you are looking at yellow, don't bother yourself looking at it because you do not need those information. Okay, so now with that being said, you come back to this page, you go to how to analyze the market using the sentimental analysis. Okay, current slideshow going over now. From the sentiment analysis, it is expected that we have a general perspective in the market that 90% of traders, retail traders, lose money. Retailer lose money 90% of the time. Okay, if retailers lose money, retailer lose money 90% of the time. Therefore, if you are opportune to see what the retail world is doing in line with the current position on any particular pair, now if the retailers are buying a market, now if the retailers are buying the market, it means that the market definitely should be going down, right? Since the retailers are always strong. So you look at the retailers word to gauge the sentiment. So how do we monitor the retailers word? We have two major websites that I make use of, but which are not often very too sacrosanct. I use the cftc.gov, but you might not need this, but you just might have to take a look at this. Then I use my fsbook.com. Now, under the cftc.gov, this is what we call the COT report, where you monitor the performance of the banks and how they are doing it. But sometimes the banks can be wrong as well. They possibly trade with deep pockets. So as a retailer, you do not have that kind of cash base, and therefore you want to just have an idea of what the banks are doing so that you can use it as a guiding principle to your position. But nevertheless, understanding the fundamental and slight view of just peeping into the bank's book can also equally be of great advantage. But your general purpose of trading should be hugely dependent on the technical analysis. And then this is what our view is going to be hugely dependent on in the long run. This is my FS book. I'm just going to do a short piece of it, what you look out for under this point. Now, if you want to trade the sentiment analysis, then what you do is come to my FS book and then ask the question about sentiment. So myfsbook.com, very important website for that matter, that if you might want to trade Forex, you need to have an understanding of how to use this. So I'll go to the sentiment section. The sentiment section is, I'm going to be looking at currency. So when you come to this level, you possibly continue to my FS book. What you do is first sign in. I have a sign in account. You can sign in with your Facebook, your email or whatever. So I'm signing with my Gmail. Okay. Tell me to select account I'm signing in with. Just hold on. I think it should be done in the next. Okay. Should be done. Sorry about this. So when you get to my Facebook, you have signed in, then you agree to terms and condition. I equally have my settings there. So the next thing is come to community, come to sentiment. So once you come to sentiment, now under the sentiment, you go to, if you look at this currency pair, and let's say you're looking at EU now. Let's say you're looking at EU, 55% retailers are currently long on EU, while 47% retailers are currently short on EU. That is what it means. Now, my view is to look for currency assets that are in the extreme. Example of Euro CHF. Euro CHF has extreme long 88%. That means the market is currently selling heavily in the Euro CHF, but but retailers are longing it. Therefore, retailers are losing heavily in this market. Now, in this case, if they are longing it and they are losing, if you look at this market now, it's heavily going down. So it should possibly be tending towards the extreme where you should be looking at opportunity to buy. I look to buy an asset that is having an extreme at 90%. Since 90% of traders lose money, so by the time the sentiment is reading 90% and above, it is assumed that the market, there is no more loser. No, I mean, the retailers have been completely slaughtered, right? If the traders are completely slaughtered, what happened? The market will shift here. So this is just the way I look at this sentiment here, and it's nothing more. So I can look at AUDCHF at 86, so a little bit close to base for me to pick the market from the bottom and then buy. If I look at GBP AUD, market is at 90. So if you look at this, you possibly will be having a view to like finding a sell opportunity in GBP AUD. Like for now, GBP AUD has a sentiment of 90% long, short now, and this technically, and I go to the chart, I should be looking at GBP must be going high up. Retailers are shorting, the market is going long. So if you take a look at the chart of GBP USD, now you possibly might say, okay, Control M, and then look for GBP AUD. So this is GBP AUD. The market was going long. So you can see that at this time, this market has been going long from here and is currently at 90%. So I should be looking at opportunity to do what? To start looking for a sell because it is already at extreme. There is no more seller in this market to be slaughtered. So market maker do a shift and I will be looking at opportunity to sell this market at this point where putting a sell limit in this market. That is how I just look at that sentiment and I can pick a particular trade without spending less than 5 minutes on that chart. I look for currency that is trading in the extreme zone of losers. 90% sellers from the retails means that there is no more retailer to slaughter. Market will shift here. So I should be looking at selling the market. 90%, above 90% buying retailers, that means there's no buyer to be slaughtered. Then the market will shift here and then I want to be wherever. But invariably, you just need to look for market that is trading at the extreme above 90%. It's either in the short or in the long. Okay. So once you pick it, you are good to go with picking a particular top. This is how I pick the top in the market and then without fear of any, because when the market is already in the extreme zone of above 90%, there is likelihood that the market will not continue to move further. This is on the basis that 90% of traders will lose money in the retail world. Therefore, if you can see the balance sheet of retailers showing 90% loss ratio, that means there's no more retailer to slaughter. Then you join the reversal of the market in that regards. If you cannot see it, then you don't need to force the trade, just let it go. But your view is to spend less than 5 minutes here on a weekend, and then you can pick a particular currency pair you want to concentrate on in the subsequent week. Okay, just scroll down. Now I've selected limited currency pair that I want to pay attention to. Any currency that is not stated here, I'm not interested in. If you look at Euro CHF, currently 88%, the market is still possibly selling. Since the market is selling, maybe by Tuesday, Wednesday, it should get to 90% at the low base. Then I will be looking at opportunity to buy this market. But I'll just have it. But for GA, I'm very close to where to sell from. And that is how I use the sentiment to gauge my outlook. This is an important part of trading that you do not need to play too much and wait on technical analysis or fundamental analysis, because everything is embedded in psychology of the market, how it is processed. Market operates in cycle. When there is no more losers, then the market maker pull back and try to find people to track in. We will talk about this market maker play pattern as we progress in the subsequent presentation. But this alone is a gold mine. Keep it, exploit it, make good use of it. When you make money, don't forget to say thank you to GTI and Infinos Capital. Thank you very much. So now we go to how to analyze the market. So we go to how to analyze the market technically. Okay, from the technical aspect, this actually will be the meat and onion of our trading decision. Now we possibly can now say, okay, to analyze the market technically, we use the combination of indicators and technical tools, namely candlestick, oscillators, moving average, trend line, and so on and so forth to read the market mood. Within the scope of the session, we will limit our discussion on technical analysis. Mind you, you will need to do me an assignment to set up your my FS book and your Forex factory to enable to synchronize timing, to synchronize no impact and high impact news on Forex factory, and also to synchronize the market sentiment for few selected major currency pair on this setting, on the my FS book. So you are able to do this with be a watchword that you will always enjoy till the end of your trading career. But it's just a way to make your life easy, if I may ask. But nevertheless, from the technical perspective, now that I have seen that GBP AUD is currently near the top side, then I should be looking for opportunities to sell. I will come to look at my technical where to do this sell from. As I just look at it that time, I was able to pinpoint that I will just wait for a market to pull back a little bit, and then I will place a sell limit at the very top, looking at a double top pattern formation, and then I can start selling this market. Now that is technical analysis. Waiting for candlestick formation, waiting for support resistance. Those are technical terms which we are going to exploit together as we all progress. So let's look at our next slide. On our next slide, we want to look at, before you analyze charts technically, you have to know the type of charts that are available in the market on a major point of view. In the forex market, we have three types of charts, namely the Japanese candlestick chart, the bar chart, and the line chart. Often used now for the Japanese candlestick chart, they are often very, very visual. They possibly present information in such a way that you will be very happy to look at charts from its own perspective. However, it is not just all about looking, it is about understanding what the market is saying. Among all the type of charts, the candlestick happens to present complete detailed information. So technically, what is a candlestick? A candlestick is a graphical presentation of data, graphical capture of data covering the open of the price, the close, the high, and the low over a period of time. Okay, like I say, let me just put it in writing so that you can possibly, whatever. To read the charts, you say a candlestick, which I will call candle going forward, is a pictorial capture of price data over a period of time covering the open, close, high, and low in the market. Full stop. Now let's take a look at this together. Now for a market to have a open, let's say the market opened at this point, then went up, came down, came up, and closed this way. So this is our close, and then this is our what? Our open, right? So in this case, this candle will look like this, right? So this candle will look like this, obviously. So the market's having this. So in this case now, I possibly can remove irrelevant things that are not needed on this chart, and then we'll have this kind of structure in this regard. So this becomes our what? Our open, we put O. Then this becomes our close, we put this. This becomes our high, we put H. Then this becomes our low, we put L. In this regards, if you put in L here, if you're putting L at this point here, in this regards, this candle obviously went down under the period of review. A candlestick is measured in period. This period of review is what we call time frame, which we're going to be exposed to later on as we progress in this whatever. So for the period, you can have a graphical data capture for every minute, every 2 minutes, every 5 minutes, every 15 minutes, every 1 hour, every just name it. You can have data capture for anything. But nevertheless, our attention is to have a comfortable way of trading the market without necessarily being attached to the computer 247. Like I said, when during our last class, I talked about when to look at the market. I talked about the brink period and the dead gap period. We are currently in the dead gap period between the hour of 10 to 11 is what we call the dead gap period. In those times, brokers are often very careful not to be too overtly exposed because the market is as good as dead. So manipulation from the global world is not impossible. So technically, this is the open, the low, and the market went low under these regards. So variably, we have the open, close, body, and range. Now, what is the body? When you look at the high and the low of a candlestick, the space between this point here to this point here is called the range of a candle. The difference between the high and the low is called the range, okay? Now, when you look at the space between the open and the close, is called the body, okay? So in this case, this is called the body of the candle. Now, you can see that this is very, very visual. However, for a market that is going down, like this, we say this market is bullish, is bearish, right? Bearish, bear. Bear means selling, Abi. Bearish candle, okay? Now, if this candle goes up, we call it bullish. In this case, the candle can be like, let's take a look at this. Let's change the color so that it can look different from what we have drawn earlier on. And then we can say the candle market goes up like this, form a low, but in this case, we have the open at this point. This is the open, and then this happens to be the close. Now, in this case, this type of candle went up, right? So if the candle goes up, we say the market is bullish, okay? When the market goes up, we say it is bullish. Now, I'm sure it's getting interesting at this point. However, you can equally identify the space between the high and the low to be equal to the range, and the space between the open and the close to become the body. Just like when we're in primary school, when we are doing letter writing, we have the headings, we have the address, date, headings, title, body of the letter, then closing part of the letter. So also we have in the candlestick wherever. However, this is just the beginning. For me, if you take a look at candles, if you put candlestick in Google, you will see a lot of materials. But so a lot of material that you see there are obviously not going to be relevant to your trading career as in the long run. You only need to master a few things, not mastering so many things. Mastering few understanding the usage and its application will be what that will guarantee your success in this business, not becoming a professor or an encyclopedia of trading and not being able to apply any. A jack of all trade in Forex is a loser, okay? You need to master few things. So let's go in depth into candlestick as progresses. Nevertheless, like I said, for every capture of price data in a candlestick, the close is the most important. Why? Because when you wait for the close of the market, then you can decide to you'll be able to decide what the overall bias and sentiment of that candlestick is. A candle can decide to go up like this, and all of a sudden reject and close like this, okay? The fact that the candlestick was once traded at this point does not mean that it will close high. It can equally fall and close like this, and this candlestick can still go up and close at this point. So it is the close of the candle that determine who eventually won the battle. If it's actually going to be the bullish, the bulls, or the bears. If for any reason you want to possibly have a wait for the hand to determine who eventually win before you take a decision, trying to act faster than the market itself is a recipe to having a margin call. A recipe to having a margin call. Like when I was talking about leverage and margin, I said margin is the requirement, the exact amount within your capital that is required to open a trade. So you have a margin call when you do not have enough capital to open for that trade, then your trade will be automatically liquidated. Then the broker will send a message to you to come and fund the gain. I'm sure the reason why you are in this class is not to have a margin call. And in a bit not to have a margin call, we need to understand ourselves going forward and then be able to apply what that matters into the forex. The close of the candlestick is considered to be the most important because it tells you can decide, you can take a decision based on the close, not on the open or on the whatever. So now in this regards, let's pay attention. Now there is an argument that says since the close of the candlestick is the most important, so while looking at the high, low, whatever, this is what that gave birth to line charts. Okay, this is what that gave birth to the what, to the line chart. The line chart is a graphical display of data over a period of time indicating only the closing price. So the closing price of these candles, each candles is being connected together, and then it will now form this line chart that we have on this whatever. So this line chart is a graphical representation of what we have here. Now this is it. For any other price data that is captured on candlestick, the close is the most important. So line chart assume that any other price data is a noise making. So let's go straight to detail. Now this is it. Which one should we be using? I will say understand both. If you want to take a look at the sentiment of the market and be able to look at entry and then where the traps are located, then you need to look at candlestick. But if you want to take a look at the key levels in the market, where the tons, where the support and the resistance, the demand and supply are located in the market, then you switch your chart to line charts. Now let's take a look at this in a real life situation. Now in this case, I'm having this market here. Now this market happens to be GBP AUD chart, like you can see the name of this chart at the very top. Now, but if I want to look at this technically, something can possibly occur to me that I want to possibly, like now I have, the market going this way. I have it this way. I have this way. Then I have it this way. But if I want to take a look at now this is the structure that the market has given to me within this period of review here. Now, if I want to look at it, now I can see the exact tons in the market, like this eye point here. I can see this. I can see all this structure here. This is because I am trained to be able to see this visually, but to many, you will not be able to possibly look at this and see it at glance. Sometimes you want to see it better, and then you turn your chart to the what? To the line graph. On the line graph perspective, you will be able to see some things that are not too obvious on the candlestick. So for instance, now if you take a look at this point, you see that the market has a test here, and then again. So you connect these three levels like this. Now, you equally can see that the market has a test point here and then has a test point here. So you connect that level like this. So I will tell you about this structure later on, and then how you can see it carefully. Now this thing, you have also at this point as our top level. So you can see key level at glance using the line chart down when you are looking at the candlestick. So when you pick the key levels, technically you come back to candlestick, all you need to do is just make the extreme high as a zone. So in this case, I'm going to be putting this here as my key levels, and then this level. And when we get to the support and resistance tomorrow, in our next class, you're going to see how this is done. So you can see that the market possibly has this kind of structure. So these are your key levels on this chart without thinking too further. But you are able to pick this level technically because only when you change your chart to the absolute close represent. So this is a situation where you have to switch the whatever. But if you want to look at a possible sell in this market, you want to wait for the market to come up a little bit, form something like a M top at this point, then you sell at this point. Now, what are you going to be looking at? You're going to be looking at a possible rejection of candlestick at this point, something like this. Okay, I want to be looking at something like this at this point, in such a way that there will be upper wick in this regards like this, then I can't be selling. So now let's take a little bit into the anatomy of candlestick itself so that we can possibly have a better view of this market without going too deep into what is not relevant. Now, based on our outline, we were supposed to have a look at how to analyze and how to set up our chart sentimentally, and then we're already into the switch and then the candlestick detail formation and sentiment. So let's take a look into the candlestick word on its own. When you're looking at the candlestick speak a language that every trader must understand. So I'm not going to talk to you about the origin of candlestick. If you want to read about that, use Google. But I'm going to tell you about what you need to know, the formation of a candlestick. And this has to do with looking at where the traps are within the candlestick. And therefore, you might see a candlestick like loose bullish, but in read says it is not a bullish candlestick. You do not need to buy that kind of candlestick. Candlestick, when you're looking at candlestick, three things you want to see: the formation, the sentiment, and the bias. Now, when you're looking at formation, you want to tracking the trap zone within the candlestick. So let's take a look at this candlestick on its own. The market opens at this point, moved up, formed a high, came down, formed a low, and then closed back up. This is an abnormal candlestick. Abnormal in the sense that in this case, we had a trap of buyers to this high, then we have a trap of seller to this low. Therefore, the market has two traps at the high and the low. If this candle close at this point and you decide to do a buy, you are going to be having short run because you are going to be hitting a trap zone at the top here. And if in this case you don't want to buy this candle, whereas the candle looks bullish. If you did not study the trap, the formation of this candlestick, then you possibly will be taking a wrong decision on this market because you can't buy this candlestick at this point. There is a trap of that something caused this market to fall heavily at this point. Something caused this market to rise heavily at this point. These are called traps, trapping buyers and trapping sellers. So what you want to do is that you want to sell this candlestick even when it looks bullish, right? This is the aspect of formation. But if this candlestick can equally take another form, it opens at this point, came down, trapped sellers, and then moved up and closed near the high. This is the kind of candlestick you want to buy immediately because there's no trap that causes every fall of this market at the high here. This is a situation where you look at a healthy candle and a healthy formation and you want to continue buying. Okay, so you don't just buy a candlestick because you lose bullish. You need to look at the formation. So how do you marry this into your trading and do not get confused at the same time? So if you want to look, if you open the daily time frame, you pick a particular candlestick on a daily time frame. This daily candlestick has a combination of 24 candlestick on the 1 hour. So if you look at the 1 hour chart, you are going to be seeing 24 candlestick that made that one daily candlestick. So how the 24 candlestick move intraday before they eventually came to form that daily candlestick has a whole lot of story to tell. And this is where the formation is. I don't pay attention to the name of candlestick. I pay attention to the language that it is speaking. Now, if the market has a LD formation and one point trap, then I can take the direction of the market that is not located near the trap. This is what we call, if you have had a slogan that says market will often move in the path of the least resistance, where the market is least opposed. Any area where the market is opposed, the market don't want to go there. Okay, so if the market has a trap here, then the market will not go there. The market will go against it. If the market has a trap here, the market will not go there. So the market will often come down like this, then start going up because it has seen a trap here. It doesn't want to go down far. So if you take a buy in this market on this kind of candle with this kind of formation, you are going to be losing the money because the market will now first go down before eventually going up. You don't want to take that risk. So understanding the formation of the market of the bigger time frame candlestick formation on the lower time frame goes a long way. Okay. Now, in sentiment, you look at the color of the candlestick. If the candle is bullish, it should be positively. It should be. Now, this is it. When you're looking at the color of a candlestick, I may want to be using blue and red. You may want to be using purple and yellow. The color does not really matter. Just understand your own color. Set it up in such a way that you will understand yourself and nobody should teach you how to do otherwise. Now, this is it. If you are comfortable with pink and white, put it pink and white. If you are comfortable with black and red, put it black and red. Whatever the color you pick, just understand what the color is when the market is going up and what the color is when the market is going down. So how do you set your charts, your trading terminal on the MT4 to reflect the color of candlestick? Press right click on your screen, come to property, Okay, when you click on property, you will see this page where this thing is. Now, for instance, now if you click on this point where you see gray and black, you will see that the candlestick have changed color to gray and black. If you click on F8 and click on yellow on black, the candlestick will equally change. If you click on this page and decide to change the color, you can decide to pick any color you like within this body. The color will equally change accordingly. Okay, so now you can equally put any color you like, but what do you have to gain looking at colors and whatever? Just pick one. So for me, I decide to pick this color and I've set it and I can whatever. So at the top of a chart, you have where they wrote the zoom in and the zoom out. Okay, so if you zoom out, the candlestick will go smaller. If you zoom in, the candlestick will go bigger. Choose, make it be as big, just big enough to accommodate what you want to see, so that you do not have to see so many. But in the long run, I'm going to be sending you a template that is set already, automatically set to reflect what I'm going to be teaching you in this training. So you don't need to do it manually yourself, but understanding how to do it wouldn't be the bad idea anyway. Okay, so we go to the sentiment. The sentiment has to do with color. So if the market opens and close higher, we say the sentiment is bullish and the color should be bullish, abi? If the market opens and close lower, we say the sentiment is bearish. Now, that settles a whole lot of things. So let's take it to the next slide where we're going to be seeing some basic things like sentiment and bias of a candlestick. The sentiment of a candlestick depicts the direction and therefore compares the close and the open. If a candlestick close higher than the open, sentiment is bullish. If a candlestick close lower than its open, sentiment is bearish. Sentiment of a candlestick is an overview of event captured in the candlestick, whereas bias is a little bit technical. It has to do with understanding the equilibrium. Now, this is it. Let's say we captured a candlestick in this way. Let's capture a candlestick in this way. And then this is the high, and then this is the low. Do a visual gauge for what the middle of this candle is. Let's say it is going to be here. If this candlestick close below this level, then we say the candlestick has a bearish bias. If this candlestick close above this level, we say the market has a bullish bias. So this is considered to be the equilibrium level. And then now, where the market close relative to the middle is said to be the bias determination. So we compare the close of a candlestick relative to the equilibrium, which is the middle line. So if the market close below, we say the candlestick has a bearish bias. If you close above, we say it has a bearish bias. So now let's take a look at this diagram here. Now, this candle opens here and close here. This is a bullish sentiment, all right? But the fact that this candlestick has a bullish sentiment, and this is going to be the middle of this candlestick, right? Something happened. This candle was once traded at this point, but heavily rejected and closed at this point. This rejection at this point gives a view that this level is a trap, isn't it? Therefore, the bias of this candlestick is bearish because it heavily closed below the middle line. Instead of looking at a buy, you want to be looking at a possible sell in this market, even when the color indicates going up. But the bias in this market is heavily tilted towards the downside, and then you want to be looking at a sell instead of buying. Okay, this is a situation where a candle can have a bullish color, but the bias in it is bearish. It's bearish. Let's take a look at this on the chart, then you can possibly come to understand what I'm trying to depict here. So now let's take a look. Now, look at this candle here. Look at this candle here. Now, if you take a look at this candle here, the middle of this candle is going to be where? It doesn't have to be exact. It doesn't have to be accurate. Let's say the middle of this candle is going to be here. Now, this candle opens here and closes here. The color is bullish, right? Indicating that the candle went up. But there is something that caused this market to reject at this point and close here. Now, what happened to the market after this candle? The market went down, isn't it? This is a scenario whereby you need to respect the bias. Anything that has to compare the close with the equilibrium is considered to be the bias, and that is what depicts the direction the market eventually goes to. So if you create if this candle is bullish sentiment because it close higher than the open, but the bias is bearish. So you want to be looking at opportunity to sell, not to buy. Okay, it is when the market has a bullish bias and a bullish sentiment that you start buying. Like this candle now, this candle has a bullish, it opens here and close here, but close above the 50% line. Market only came down to the line and then continued to go up. So this bias sentiment formation is very important, irrespective of the name of the candlestick. Fit it into these three basic principles. Then you will have a sweet flow analysis in that market, irrespective of your understanding of that name. We don't trade names in the market, we trade structure and with understanding, and that is what makes you a good trader. If you have possibly have studied book on candlestick and you are making loss with it, it's possible because you did not apply the principle of trying to track the formation within the candlestick or even respecting the bias and sentiment. Okay, now taking a look at this kind of sentiment, a sentiment could be neutral. A neutral if it opens and closes around the center line. So this is what we call a neutral sentiment and a neutral bias. When the market opens at the same price and close near the middle value, we say this market has a neutral bias and a neutral sentiment. Whenever you see a neutral structure like this, it indicates something, and that thing is indecision. So you want to wait for the next candlestick that comes next if it will validate your decision-making process. Now take a look at this candlestick here. I don't want to know what the name is called. I'm not going to be teaching you the name of candlestick. It won't help you in the long run. Just understand structure of the candlestick and look at this sentiment. This candle has closed above the middle line at this point and therefore bullish. So you can see the next candlestick that's come afterward going up, right? So that's set to a whole lot of things. So we're looking at retest of this structure at this point, like I said, to form a trap and then continue to sell based on the sentiment, whatever. I'm able to pick this Euro GBP AUD based on sentiment, isn't it? That I have read because it's currently trading in the 90% zone. But nevertheless, this is something you will often encounter as markets progress in the long run. Now, looking at this chart, this is a 4-hour candlestick, time frame. You can as well use the 5 minutes, and then each candlestick will represent 5 minutes, right? You can as well use the 30 minutes. That means each candlestick will represent the 30 minutes. You can as well use whichever you want to use, just use it and then understand. But technically, if I want to look at the sentiment, if you look at this market now, you see that the candle is indecision, right? Like open and closing almost at the same price. So this possibly should give you a clue to like looking at the next candlestick. So if you wait for the close of Monday and you realize that it closed bearish after this indecision, it means that this market is topping out based on what the sentiment is telling us the other time, and then we can take a good view in that regard. But nevertheless, I have this kind of structure that tells me I should respect my view in regard. So this is daily, this is weekly, and then this is whatever. Now for formation, I'll look at the daily time frame, pick a candlestick, and then come to the lower time frame, let's say 1 hour or 30 minutes, to be able to analyze the sentiment and the structure inside it. Then I can take a decision accordingly in that respect. I hope that clarifies a lot of things. So now let's go to the bias compares the close. Bias compares the close and the equilibrium. The equilibrium is the 50% line. It does not have to be exact. I've been in a class where somebody is asking me, do we need to use ruler or any special tools? No, you don't need to. So once you open your chart and then you want to see the middle, let's say this candlestick now. Let's say this candlestick, 1 hour, 4-hour candlestick. You want to see the sentiment, right? Just carry this box, put it at the low, drag it to the top. So once you drag it, that is the range of the candlestick. Double click on it, a middle dot will appear. This middle dot is the middle of that candlestick. You can see that the middle of that candlestick indicates that the candle closed higher than the middle dot, which is bullish bias. The reason the next candlestick that comes up is a buy opportunity to the what? To the upside. Okay. Now, if you want to look at any candlestick, just put the box at the top, drag it to the down. So once you drag it to the down, double click on it, you will see the middle dot. That middle dot is the 50% now, which is the middle. Bring something here. You have just measured the exact middle. This candlestick close below this thing, giving us a bearish bias. There you want to be doing what? Selling this market accordingly to that bias. I'm sure that settles a whole lot of things. So now let's tomorrow in our next class, we're going to talk about support and resistance, demand and supply, and how we can possibly map our chart without applying any indicator and still be able to trade better than anybody that is using indicator. And that is the goal of this training. Mind you, if I may like to say, this is just the part 1 of our training, and this is the basic where we have to groom you to be able to take a bigger role in the forex trading as time progresses. So this is our second session, and I want to believe that you have fun in this class. The recording of this session will be uploaded in our YouTube channel, and then you can equally have a look into it, and then start growing your trading career. We're going to walk you through the basic to the advanced, like I said. But if you want to participate in the advanced, MJ, our boss, will possibly tell you what you need to do. You will need to join the live session with us. In the advance, we're going to be taking some live trade together. You will make it a learning and earning platform where you take my trade, I give you analysis, I give you trading view, trading outlook, then you possibly cannot take a decision based on that. While you are learning, you grow your capital step wisely. So it is a win-win thing for us all. So if you feel like you want to open an account and then you want to join the intermediate, open your account, fund it, any amount you like, starting from $50 and above, then you are in. All right. So I want to close this meeting at this point, as in not wanting this thing to be too long. Today, what have you learned? You've learned how to analyze place order using the MT4, MT5, and Android. Analyze the charts fundamentally, technically, sentimentally, and setting up your trading terminal. Then you've learned how to look at the charts, how to analyze the charts, looking at the candlestick, the bar chart, and the line chart, and when to switch. When to switch has to do with when the market has, when you want to look at support and resistance, which we're going to do in our next class. Then you're going to see, like I said, support, resistance, trend line, and oscillator, YRSI, and its application. Then you'll be able to see how we make use of the line charts in place of the candlestick, and then where candlestick becomes important. Since bar chart is more or less like depicting the same story of a candlestick, but not actually looking at making it colored, then we want to place a lesser value on it. So we're just going to be making use of line chart and candlestick, and that settles a whole lot of things. Today, we equally talk about candlestick formation, sentiment, bias. So next class, we're going to start with blending, but I want to assure you that you're going to have fun along the line with us all. All right, thank you, everybody. MJ, if you're there, just let me have your hand. Annie, you have a question? You have the mic, please talk. Annie, question time. Okay, Annie is not talking. Isaac, you have the mic. Unmute yourself and talk. Unmute yourself first and talk.
Okay, can you hear me?
Yes, clearly, sir.
Okay, so assume you just came into the market, how will you be able to determine the open and close?
All right.
The formation of the chart.
So let's say you came to the market briefly. Now, this is structure. From this point, you can see the demarcation line on your chart, right? You can see the demarcation line. This demarcation line indicates weekly. So last week, this is the open of the week. This is the open of the week, and this is the close of the week. Now, this is the open of another week, and this is the close of the week. Now, a new week has just opened. Now, if you look at a particular candlestick, depending on the color that is currently ongoing, let's say one candlestick on the zone. So let's say you are looking at this candlestick. Now, this candlestick that you are looking at now, let's make it a little bit big so that you can see what I'm trying to say. Let's say, okay, we just zoom in. Let's say we are looking at this candlestick now. It's currently red, right? Meaning it's going down. Therefore, it means that this is the open. This is the current high. So let's remove Ctrl Y. This is the current high. This is the current low, but this candlestick has not closed yet, right? So if this candle has not closed, you cannot take a decision whether it will be definitely red or blue in the long run, right? Right. So if you come to the 30-minute time frame where you're going to be seeing the intraday, okay, control Y, you put it, you will see that this demarcation line indicates the open line for the day. These are the open lines. You can see the demarcation line on your chart. Very easy to track. This demarcation line indicates open line. So the open of the candlestick on that line is the open of the day. This is the open of today. Now the market went down and the currently trading around this zone. So like on Friday, this is the open of Friday and this is the close of Friday, right? So you can always see those structure according using the demarcation as a guideline. Okay, are you there?
Yes, I'm here.
Does that answer your question, sir?
Yes, it does.
All right. So irrespective, you can always see, let's say you want to use the other, normally, if you open your chart, this is what is going to give you this kind of structure. This is what you're going to be having, okay? This is the kind of control G, control Y. This is kind of structure you're going to be having. So you can see that the candle is white when going down and green when lime when going up, right? So you can see that when the candle is coming down, it was white, and when it's going up, it was lime. So now, if you pick this candlestick now, and this candlestick went up, that means this candle, the open of this candle is at this point, and the close of this candle, this one is at this point. So the low of this candle is here, and the high of this candle is here. Everything are visual. But if you turn this candle to line chart, this is what you're going to get. You're going to be connecting just whatever. You can see that it's a little bit more clearer in view than when you were looking at the candlestick, right? Now, you can turn it to line chart and you can make it bar chart, but I don't use the bar chart. I use only the line chart because it helps me to know the exact support and resistance in the market. So like you will get to know how to place these lines subsequently, maybe in our next class after we do our support and resistance trading analysis. Are you good?
Yes, I'm okay.
All
Okay.
right, thank you very much. Any other questions, sir?
No, that would be all.
Okay. Which pair is this, please? The pair we're using is GBP AUD. Why we were looking at GBP AUD for possible sell this week is because looking at the structure, looking at the sentiment, I was able to see 80% structure, right? Like GBP AUD, market is currently on 90% short from the retailers. So meaning that almost all retailers have completely has lost money. So if there is no retailer in the market to lose more money, the market maker is going to reverse the shift, right? The retailers always come into the market late. So when they are finished losing money in buying, they will now shift to sell. So now they are finished losing money selling their market. So they want to recover by buying. That time they want to buy, that is when the market maker will actually track them into buying, and then it will now sell. So that is just the concept using this whatever. If I look at other chart that is close to 90%, like GCAD, 81% is not yet set, it could still go up. Like Euro CHF, you look at Euro CHF, markets, retailers were long, market was dropping. Euro CHF, you can see the market was dropping, control M, Euro CHF. We're going to become practical on this subsequently in our intermediate session. The intermediate session is actually very, very, it's something that you will not want to miss. Okay, let's make it set show all. If you have a currency pair you are looking at is not showing, just click on click on the page and then click on show all. Every currency pair will come up immediately. Immediately comes up, yeah, you can see Euro CHF. It is currently dropping, but the retailers are buying. You can see the retailers are buying and the market is dropping. So what do you want to do? You want to look for opportunity to buy this market since you have 88%. The retailers have just had little bloodline in their buy position to reach 90. So I will just come and be looking at a possible base point where I will buy this market. So if I look at this market is currently at this point, don't be surprised. This is just like what we're going to be expecting in this market, and then this market we can go back up in this direction. Just because I was able to track this information from the sentiment, it helped me to filter out so many pair, make me to concentrate on a particular pair that is very going to be worthwhile, the drill for me. Taking a look at this market has done a whole lot of sideways market for too long, and then this is what we're going to be having subsequently like this. You're going to be able to analyze this kind of market and then pick the very base where you can look at trade and use 10 pips stop loss and target like 500 pips in the long run on this on one particular currency pair. That is going to be like having something like a 1 to 50 risks to 1 to 50 risks to reward ratio. But subsequently, you go to see how this is done when we are doing put it all together towards the end of our psychology of trading and creating an intraday system on our subsequent class. I hope that settles your view. So we are having a radar for Euro CHF buy, GBP CHF sell, and then maybe UCAD based on the sentiment analysis. Then that sentiment just help us to filter the currency in the market, and we concentrate on the one that is having a very sweet outlook at the currently. Okay, are you good with that?
Yes, yes.
Now, which way is this? Okay, how do I get the YouTube channel? I have posted the YouTube channel in the comment section. So please, John, please go to the chat box. You will see the YouTube channel or search for this. Let me see YouTube channel. YouTube. Just come to YouTube. Search for just hold on, it will load. Search for Global Trust Investment. So we usually have some other videos that are there, but majorly the one you want to see is this one at this point, which was our last class, and then it's already there. Every video will be uploaded to this channel, Global Trust Investment. This is the one of last class, and today's class will be uploaded to as well. Thank you very much. Now, sorry, as a new trainee, how do I get to communicate to a reputable broker on to start my account? Just discuss with MJ. MJ should be able to attend to that technically. Infinos is regulated, and you're going to have smooth ride with Infinos Capital if you want to take trading career as a business. And I'll be going to be your mentor from the beginning to the end without a expiry time as regards this. So you're welcome to trade live with us in the advanced session when the time comes. Okay, so that's answered. Okay, that's settled, answered, done. This settled, answered, done. Thank you very much. No more question. Or let me see, do we have any question here? Sorry, I late to join. Okay, sorry, don't worry. The video will be uploaded to the YouTube channel. The YouTube channel again is what I have here. So you might want to pick it up, select. This is the YouTube channel, copy, and then paste. That is the channel link. So you might want to go to this thing again. That's set to a whole lot of things. Okay. Thank you very much. MJ, are you there? Let me see, MJ. Okay. Good evening, sir. MJ. Now you have the mic. Unmute and talk, please.
Thank you so much, Mr. Tijanet, for the wonderful teaching. I want to believe that make a big difference in our life. More people coming our way, even at the cost of this training. Please, I want you to take this training very serious. If it takes away from your eyes, if it takes you to make sure everything humanly possible to go through this, it for a lifetime, but the knowledge will be for a lifetime. Whatever it takes, because the price for your financial freedom is expensive every day that goes by. It will never get easier. It will never. Please, I want to thank Mr. Jenny for the sacrifice and everything. Please, I want you to share it costs nothing for you to put this on your status or on all you could do for somebody out there going on, and it is free. lot of us paid thousands of naira just to access this kind of training. But thank God today, Infinus. So without wasting much of our time, I want us to always, number one, share this. Go. Want you to also stay alert on the chat because we are going to be posting some information. So always stay alert there. And that is it. On next time. Thank you so much. My name is MJ Young, and God bless you. Mr. Tijani, thank you so much.
You're welcome, sir.
Okay.
Sorry, who eventually won that match? I hope the England won the match, Abby. All right, no problem. Thank you very much. God bless you.